Hello, my crypto crackheads, which is a very politically correct and gender neutral term. Today is March 3rd, at least in the United States, in the morning, and my BEPRO train is asking for updates to know what the heck price is doing. So in general terms, price is consolidating at the extreme top of the range. And what does consolidation means? It means it's allowing its indicators to catch up with the price because the price just skyrocketed. And once things catch up, price could go down, but typically if you consolidate near the very, your all-time high that you just set, that's really bullish. So that just means you're going flat and you're accumulating a base. So if you're going to build a house, you can't build it on sand. So if you just keep going up and up and up and up, you're building on sand. You have to build a base. So if a blue sky breakout like this wants to keep going up, it has to build. I mean, this could be boring for easily till March 11th. And that's awesome. The longer this goes sideways, folks, the better it is. And if it does not go below 0.004, we are sitting like this. That's sexy. All right. So if you bought at 0.006 and it goes down to 0.004, if you were waiting to have an entry point for more BEPRO, like 0.004 would be beautiful. And I actually made a video on that when it was going, when the 4 hour was coming down here. I made a video saying in 5 days, the probability of you wishing you got in at this point as things are tanking and it looks scary. And I bought down here. I think I did it live on the video. I bought it right there. And what happened? Boom. And I even said the next 4 hour candle is very likely going to be green. And it was. And it hasn't been 5 days yet, I don't think. February. Yeah, it's been about 5 days. So, and on a percentage basis, how much is that? That's 50%. So if you put in $1,000, you now have $1,500. And price hasn't even really gone up aggressively. I mean, it's up 15%. I have a crypto group, and I was showing them that, hey guys, there's a trend line forming here, and I think it's going to hit it. And I'm going to put orders right around 0.005. And actually it was a little higher, it's 0.0052. And I straddled my orders around 0052, so some like 0.00528, 0.00523, 0.00519, stuff like, and they all got hit. And instantly, in 30 seconds, it went back up 20%. So for example, if I had bought $1,000 down there, I now have, in 30 seconds, it went right up. I had $1,200 in 30 seconds. All right, so that buy around 0.005 to current price, I'm up 20.5%. So $1,000 would be $1,200 right now, just with this small price movement, because I bought it when it looked scary, right? Because it's going down. That's unless you're in a bear market. So bull markets, when you see stuff crashing, that is probably a good time. It's a better time to buy when it's crashing in a bull market than when it's going up. Way better. Way better. You want to buy when it looks scary to buy in a bull market. Now, in a bear market, if it's going down, you can screw yourself. But bear markets are tricky. But anyway. So BEPRO, it's consolidating right here. And what I think is going to happen is I think it's going to go sideways until tomorrow. So price is probably going to come sideways, and hit this line and then go up. Could go down, guys. It could. And if it does go down to here, we're still sitting really pretty because this is the range. The range is from here to here. This is our bullish range. Anything above this, I mean, even above 0.0033, that might not be very bullish. Let's say to here, right there. That's our range till, about 0.004. This is a bullish range right here, up and down. All right, so if it's in this range, and you can buy at the very bottom of the range, that's good, but now it's creating a very micro range, which is called an ascending triangle, and I'll just show it to you right here. I am not a pattern trader, and I don't like pattern trading, but triangles work in Bitcoin. Triangles work. Even though this isn't Bitcoin, but crypto. So yeah, a lot of times the breakouts happen when it's 70% full. So statistically, by the time something is 70% full, roughly half of all formations of any sort of triangle, descending pennant, which is like an equilateral looking thing, or an ascending, about half of them break out by that point. Bitcoin in 2018, it went to like 90% until it tanked down to 3,600. So it was right in 6,000 for quite a while, and it was a descending. So instead of the top being flat and the bottom being the thing that has the angle, the top line had the angle going down and the bottom was flat, right? So it got all the way over here. And since it built up pressure, and it didn't go up, or regardless of the direction up or down, it was gonna do it hard. So if BEPRO goes, but here, since it's an ascending triangle, you know, it could go here, come up, come down, come up, come down, and boom, and then it can go straight up to 1.6 cents. So there are a lot of things that could happen right here. Or a lot of times when you're drawing patterns, which is why I don't like pattern trading, the price will make you form a new triangle, because it'll make it so that these aren't main touch points, and it'll go down and build a really strong base there, then go back up, come back down, and now your triangle's farther out, and now you have to wait longer time till it breaks out, right? Now, does that usually happen? No. And for smaller coins, no, because there aren't smart bots trying to trick people and take your money. So KuCoin's bots are pretty dumb, and about half of prices of BEPRO is on KuCoin volume trading. So anyway, so it's consolidating at the top. So if you want to try to figure out do things look good? Let me tell you a quick general rule here, okay? Very quick. So you have to go to TradingView first off. Don't make financial decisions off of CoinMarketCap, or at least entry decisions. So research decisions, heck yeah, do I want to in general look at this coin, perhaps invest in it? Yes, the CoinMarketCap is the best way to go. But when to hit buy, you don't use CoinMarketCap. Don't do it. You're going to screw yourself if you're doing it. And if you're using nothing to determine when to buy, well, you need to listen right now. I'm going to help you out drastically to maximize your profits and minimize the times you get scared out and then lose 30% of what you just bought because you hit sell because you're getting scared, and then it skyrockets, right? So look, TradingView.com, all you need is an email and a password, no payment. Bam. Okay? Step 2, you need to know what these are up here. These are time frames. 4-hour time frame and 2-hour time frame is as low as you want to go. Don't deal with anything lower if you're new to trading. Never. And honestly, I suggest the 4-hour. 4-hour and above. You want to use the 4-hour, daily, and weekly. If your coin is brand new, all right, and it's only been out for 6 months, okay, you need to use the 2-hour then. But BEPRO's been around since I think 2019, so I'm using the 4-hour and above. Okay, so step 3, you need to understand that the higher up you go, the more value or the more weighted holds. Okay, so better decisions are made the higher you go. And also the higher you go, the more macro choices you have. So if you want to try scalping and in and out within, 5 minutes, then yeah, you need to use these down here, but you're not scalping. Even though that's what I did down here when I bought here and I bought here. I was scalping because I thought I used the 2-hour time frame at the time to say I think it's going to hit the purple line, which is the 89 exponential moving average, because I saw that throughout price history, price is tagging that purple line over and over, and it's playing off of it. And I thought it was going to hit it, and it did. And it was a great financial choice, and now I'm up huge. I mean, I'm up 55% from that decision. And I also bought, and I saw this trend line. Actually, let me do this. I saw a trend line forming, and I decided to buy at 0.0052, and I didn't even know it was going to hit it. So when price was here, I just put in limit buy orders for this amount. And what happened? Bam! It came down, and I bought it at that point, because price went price actually got down to 0.0051. But yeah, I bought it all, and it skyrocketed up 20%. Even though this doesn't look like skyrocketing, it is. That's 20% movement, people. All right, look, 27%. I'm up 27% from that. So I'm up 27% from buying here, and I'm up 55% from buying here. So I bought when it was scary to buy. And in a bull market, that's what you want to be doing. You want to buy red. You don't want to buy green, generally. Buying green sometimes is really good if you're trying to catch a breakout. So I'll take that back. So right now, we could be breaking out right now. This looks like it's getting ready to break out, people. So so here's what I'm seeing. Even though I'm on the 2-hour chart and I told you not to use it, BEPRO is playing the 2-hour chart. So this is called the RSI. And if you go up here to indicators, you type in RSI+EMA, which you probably should do, and look for the one that says Krown. I think it's, I thought I used the one that said Krown on this side, but maybe he's outsourcing it to somebody to do this for him now, because he's retired and he has millions of dollars in Bitcoin. I saw him make over $1 million in 2018 bear market trading, shorting. Actually, he made most of his money off options, but anyway. So yeah, you want to use this, and you click it, and this will appear. But look, on the 2-hour, look at when price decides to bounce up. It's when the 2-hour RSI hits this red line. Look at this. Hit the line, went up. Okay, hit the line, went up. Didn't go up much, but then it double checked the line, so it came down to this red line. So Krown put this line here for a reason, because it holds a lot of weight in trading on the RSI. When something hits the 445, it likes to bounce off of it, and it just happens over and over across all of crypto. And why? It's because it's not humans. Humans are not creating most of the volume. Okay, the vast majority of all volume is not from retail buyers like you and me. It is from people who have bots. I'm telling you, and the bots are buying it, and that's what's happening. Okay, so you need indicators, so you can play by their rules. You don't want to play by your rules. You're going to get screwed. Don't make up your own rules. Play by the rules that you see. You look at what the rules are and you play by those. You don't make up your own rules. You will get crushed, okay? So don't think that you're smarter than the market and you think it's going to go up, so it will. So look here. It tagged the line, went way up, okay? And it actually kept going up, and then it actually kind of tanked past the line and went up. Hit the red line, went up. So hit the line, went up again. What are we doing now? We are flirting with the line and writing it as we're consolidating. So if anything is similar to what happened in the past, what are the two most likely things to happen? One, it's now going to bounce up because it hasn't quite hit the line, but it's close. It's going to bounce up. Or two, it's going to pop back down one more time and hit that line and then pop up. So the chance of it coming down to this support here, where this was prior resistance, chance of it coming down to 0.0045 to scare people out and then skyrocket is pretty high. So if I were a bot and I wanted to program it, or if I had a ton of BEPRO, like maybe 50 million, and I wanted to take your money, I would market sell and crash the price, maybe 10 million of them, come down here, and I would let people get scared and scared and scared and let them sell, and then I would buy it all back up around here. And I would buy, so since I sold most of it from here to here in my market sell, I would be buying from here to here. And then since momentum goes up, because I'm markets buying with a bunch of pressure, with a bunch of money, which I don't have 50 million people, but and then I bought back at a lower price, and then it's going up because I created the momentum up. So the chance of it coming down to 0.0044 roughly is pretty high, or even 0.0041. Because if I wanted to take your money, that's what I would do. I would make it come down to 0.0041. So if you're sitting there and you have BEPRO that you bought at 0.006, if we're still within the range of 0.004 above, don't get scared out of your position. It should be fine. In crypto, you have to get used to your $100 becoming $60 real fast, especially if you decided to buy as something's going up. So you have to be patient, and you have to be emotionally, like dull. Like you have to be a robot because you're trading against bots. So you have to be a bot too. Bots don't have emotions; they just see numbers, right? So you have to limit your emotions, period. And doing that in a bull market's it should be easy, because in a bear market, you're probably going to lose all your money if you just hold at least 83 to 99. If you hold Cardano, you're going to lose 99% of your money, just like last time, and it's going to happen again. It might only lose 97% of its value this time, but it's going to be a very high number, because even Bitcoin, it lost 83% of its value. I mean, it just happens. It will happen this year, probably not. But anyway, so yeah, that's what I think BEPRO's doing. I think it's riding this line on the 2 hour, and it's going to go up. Now, it could keep going sideways, people. And the longer we go sideways here, the better. And the price might come down here, so you have to redraw this triangle here. And we might go sideways till March 6th, so 3 more days. So I think, so option number 2, if I had to choose a second most probable thing, I think price comes down to 0.0044 roughly, and we form a new triangle, and it comes back up, comes back down, and I think that's what's going to happen. So yeah, hit the bottom of your range, put limit buy orders at the bottom of the range, and have a heyday like me, because I'm up 55% from this buy, I'm up 27% from this buy. Buy when it's red, people, in a bull market. In a bear market, you might want to get into stable coins. Bear markets are tough, and they're there to take your money, because people are trying to sell, people are trying to dump their bags on you in a bear market. That's exactly what's happening. So that's my BEPRO update, guys. This looks awesome. Okay, so look, so on the daily though, if your price is above this red line on the daily, so red for my chart is the exponential 10 exponential moving average. So let me show you. So the red line is exponential moving average, EMA, inputs 10. Okay, so if you're above that 10 EMA, that's awesome. You're super bullish, extremely bullish, no matter what. If on the weekly you're above your yellow line, or which you should make it yellow if you're going to put a mod, if you're above this line, you're bullish, period. That is the definition of a bull market. Definition of bull market is you're above your weekly. So look at the candles. This is what the candles are. So each of these candles is a week. If you're above your weekly 21 EMA and you've retested it and you stayed above under all of those conditions, currently above your 21 EMA, have retested your 21 EMA, which means price comes down to touch it and bounce off, and you stay above it. If those 3 things are true, you are bullish, period. So BEPRO can come all the way down to 0.0018 and tag that line, and it's still bullish. Even though you just lost like 60% of your money, it's still bullish, which comes to say that's why you buy when it's red. Okay, buying on a red. So if a weekly candle ever gets red here, which it will one of these times, it's got to come down and test this red line again. And at a certain point, when it goes up high enough, it has to come down and test this line. It has to. It's not possible that it doesn't. Yeah, we look at this. This is the daily. I switch back to the daily. We're above the 10 EMA. That's hyper bullish, people. Hyper bullish, and we're consolidating so we can build a base to go up. So yeah, I think we could. So it looks like we're riding the 10. I would say March 6th is our breakout day. So that's what I guess. Second guess is it comes down a little bit and makes a new triangle. So like I said, price crashes to 0.0043 because they're trying to take your money, which is exactly what I would do, which I'm not going to do. I'm the BEPRO train. And I think we could come out to March 8th. So March 6th or March 8th at the latest for a breakout. And so let's say it breaks out So let me show you why longer is better. So we have a trend line. Look at this trend line, okay? And then we also have another trend line here. So the dark green is a conservative trend line. The light green is an aggressive hyper bullish trend line. So these are two options we're playing with, and the bots will play one of those lines, period. It might play both of them. So let me show you specifically why the longer we go sideways, the better. Watch. If we were to break out now, and we tested the hyper bullish line, we would go up to 1.17 cents. If we waited till March 8th, well, let's say, March 8th, and broke out, a high breakout would be 2.2 cents. Straight up. That's why. So if we broke out earlier, we would hit this and come down and do it all over again. Right? So the longer we go sideways, the higher this line goes, and this line too. So that's why going sideways longer, consolidating at the top, is great. And when you get formations where instead of going straight sideways, it comes like this, that is good too. That's how Bitcoin usually moves. It goes up and it comes down at about a 35-degree angle, 32-degree angle, and then it goes up. Bitcoin moves like this. It doesn't go sideways very often. So let me show you like Cardano. Okay, so these general rules apply to Cardano. Let me just show you here. So I'm going to go to the weekly because it's more powerful. If Cardano stays above 52 cents, 53 cents, it's bullish, period. Now, look historically, when does Cardano come down to check the yellow line in a bull market? Well, you can't ever tell because there's no history. It's gone down almost its whole life. And it lost 99% of its value from its top to its bottom. 99% exactly. Or it was actually 98.77%. So if you had $100 of Cardano at this point, down here, you would have $1.23. All right, $1.23. So just heads up, Cardano holders. That's what's gonna happen to you again too. It's gonna happen to everybody, no matter what you're holding. If you just hold. So Cardano skyrocketed. So the only data point we have, because it's only been bullish once ever, and that's currently. So it came down so I'm going to test it from its weekly 10 EMA. When price got 62% above its 10 EMA, it crashed. Okay, let's see how far it got up above the red line this time. It got above it 90%. So the likelihood of Cardano coming all the way down to this yellow line is extremely high. However, it could go sideways and down, and what sideways and down means is it's allowing this yellow line to catch up. So I think Cardano is going to come down to, at bare minimum, 83 cents. Maybe 83.5 cents. It's going to come down that far, people. It will. Because these two candles, the bodies, are creating a ton of support, and this weekly 10 EMA is coming up at it, and price should come down and tag both the support and resistance here and the line at the same time. However, since it went 90% above its 10 EMA, I think it's going to hit the yellow line. It might wait to do it, and I think the low point, it could come down to 66 cents. So Cardano is going to come down to between 67 cents and 83 cents. That is the range, and it will hit one of those. It's going to. Like, the probability of that is over 90%. So over this month, which this should be a boring and kind of a red month here, people. So, don't expect much of crypto to skyrocket this whole month of March, because people are going to be getting their, in America, stimulus money, tax money across, a lot of the world, at least America, and late March, early April is the time when stuff should turn green and it'll be a party again. But during this month, Cardano's going to hit between 66 cents and 83 cents. Mark my words, it's going to happen. And if I'm wrong, then don't listen to me anymore. But if I'm right, well, you better tune into this channel, because I'm trying to help you, I'm trying to help you make money. So Bitcoin price. Bitcoin might be making me a liar, people, but I still think it's going to come down. I made a video the other day about the 4-hour death cross, and I think the market's playing Ethereum. Okay, check this out, people. Remember when I said, I had made a video and I said, once Bitcoin crosses 52.5 and it closes a 4-hour candle above it, then it's gonna go up. Look, bots are trying to trick people. It's trying to make people think price is going up, and it went to what level? It went above 52.5. This is a 4-hour candle. Did the candle close there? No. So what's happening? They're trying to get people to get in, and then it's going to crash down, people. Like, the chance of this coming down significantly from here is high, like extremely high. This right here, this movement, means bots trying to screw you, because bots know that this level is super key right here, because this is the previous local high. Once it's past this and it closes a candle, a strong candle, especially a daily candle, but 4 hours is pretty strong too. Like I said, it's a very special. 4 hours is a very special time frame. Once it closes a 4-hour candle above this point right here where my mouse is, it's going to go up. Very likely going to go up. So bots actually came above it, tried to get people who don't know what they're doing excited, or dumb bots excited. So a lot of dumb bots would say, an if-then statement. If price goes above 52.5, then buy, because it's expecting a breakout. Look, it just took your money, and now it's tanking on you. So in that video, I said exactly what was going to happen. I think it could come up here and bounce right off of it, because it won't close off of it. And that's what's going to happen. So on the 4-hour, what we have going on here, this orange-red, I need to change this color, it's too red. But anyway, this is the 200, and the 50 is this blue line. So in Ethereum, or anything on the 4-hour, if the 50 crosses the 200, that's a death cross, and the price goes down historically, unless it's a fake out. And so I believe Ethereum is moving the entire market right now. So the whole market is based off of Ethereum right now. And look, the blue line is crossing what? This 200 death cross. And price came up, got sucked into it, which is common. So when a very important cross is happening, regardless of sucking in up or sucking down, price gets sucked into that cross. So price got sucked into that cross. What happened? Boom, fake out, down. So, and if you want to try to figure out to where Ethereum might go down, pick a bigger candle, the weekly. The weekly, as long as it's not a brand new coin, is the best way to go. So, look at where most price action, right here. So coming down to 1394, which it already did. So it might just consolidate here and go up, people, because this is around the prior high, I'm pretty sure. Yeah, Ethereum could consolidate here, but if it does end up going down, it's going to check this yellow line, and I think it'll check the line around here, 1260. So I think Ethereum's going to come down to 1260. And it might dip below it. It might come all the way down to 982. So Ethereum, I think there's a 70% chance Ethereum will come down between the range of 982 and 1225. Like I said, trading's easy. You just, it really is. It's horizontals and diagonals and moving averages, and I guess candles too. That's it. So once you learn those things, you can make really good financial choices. So yeah, and the weekly is so what I'm doing here is look at the body of this candle. So the body is the thick part, the whisker or the wick, I call them wicks, are the skinny part, right? So what that means is, so look, let's just pick this one right here, the skinny one. The body's very skinny, the wick is really long. The wick means price did come down to here, but it closed here at the bottom of that red. What this candle means is price started here at the bottom of the candle. It closed at the end of that week here, but during the week it did come all the way down here, and also during that week it came all the way up to the top of that whisker, or the wick. So that's what that means. So the bodies of weekly candles are huge. Price almost always likes to go down to there, and the bots, what they do is they time it so that one of these important moving averages comes up at the same time at that level, and then price falls down into it. And it's usually very aggressive because it's bots trading. It's not humans, people, it's bots. You're trading against robots, okay? The vast majority of volume is from bots. You need to understand that. So there's a lot of body movement here. I think also 13. I think coming back down to check 1300 is pretty probable too. So, and since Ethereum's really bullish, the chance of it coming down here is pretty high. So daily candles, let's see what's happening on the daily. So in this bull market, this purple line's the 89. It likes to consolidate at the, I think exactly this could happen, people. I think we could have an Ethereum. I think we could have 85 days of boringness. So the boringness already started. Let's say it started here. Ethereum could go sideways and down until late April, and it'd still be super bullish. And in that time, it'll probably check this purple line. It'll probably ride the purple line or come back down below it a little bit. So on the daily chart, it looks like it might find support about here, because it already came down and checked it. So the chance of it forming like a descending triangle and checking this purple line 2 or 3 times, just like it happened on BEPRO around the 1295, 1300 mark, around the 1300 mark, is very high. It's extremely high. But on the weekly chart, what the numbers are saying is it's probably due to check this yellow line, which is the 21. So I think price will go down and sideways slowly, let this 21 catch up, and once it comes here to 1250, it's going to hit it. And it might happen in late March. So March is going to be a boring month because all of crypto is following Ethereum right now, because the 4-hour death cross is on Ethereum and Litecoin, and because Bitcoin, the moving averages are like $3,000 apart. So if you want to try to figure out what the market's doing, it's based off Ethereum. Go to Ethereum, and the market typically follows Bitcoin, but oftentimes there's 30% of the year where it follows, or maybe 20% of the year it follows Ethereum, and like 5% of the year it actually follows Litecoin. Litecoin steals the show for just a quick minute, like a 2-week period throughout every year. It happens every time. And so if you go to Litecoin, this death cross, the blue line and this dark orange, reddish color, it should also be crossing. Because, so why would it be crossing on all of these different coins if they should have different prices and it shouldn't be so similar? Well, it's because it's bots. People, you're trading against bots, so they all drive all coins to the same points. So this blue line is what? It's close to crossing that 200 line, that dark red orange line. And it got a fake out. It came, so did it come up to a pretty big level? Yeah. So once Litecoin gets above 204 and closes a 4-hour candle, it's going to be bullish. So what did it do? It got close to it to fake people out, to get you to buy, to get the dumb bots to buy, and now it's crashing back down. So to where will Litecoin crash down? We'll go to the weekly candle to try to figure out where, look for a lot of candle bodies, and look at the yellow moving average, or maybe even the red moving average. So since it already tagged the red moving average, and we think it might go down, well, if we think it's going to go down, go to a bunch of candle bodies where they all stop at the same point, and that's here. So and there's a lot of action here, I guess. Let's look the other way. There might be other candle bodies way. There's a lot of, it could only come down to 147. A lot of candle bodies here, and the wicks kind of, they're a light support, but it all aligns pretty well. And see this white line, horizontal line going up and down? It's crossing a bunch of candle bodies going left and right. And so what's going to happen is very most likely is price is going to go down slowly. It's going to go down slowly, so it lets this yellow line catch up a little bit until it gets to 147. Okay, it's going to go down and sideways, down and sideways, down and sideways, or the price will go down and sideways, while the yellow line comes up and sideways, and it's going to come down slowly to let this yellow line catch up, and it's going to come down and check it right at the 147 level. Yeah. That's what's going to happen. So this is going to be a boring month in crypto, people. So that's what's happening with the price. I hope that was educational. So you need to know, you need to get on TradingView, and you need to, go up here where my mouse is covering. You need to use the daily and the weekly. The weekly is the big guy, but if you're dealing with a newer coin, the 2-hour and 4-hour is good. If a coin is less than 6 months old, but it's over 6 months old, you need to use the 4-hour, daily, and weekly. Don't click lower than that ever. And just go between them and try to see different candle bodies where they all align, and those are your supports and resistances, and price likes to touch it. And then click indicators and put EMA, SMA, just type that in, look for the one that says Krown. All right. right here. So Krown multi-pack EMA SMAs, click that, then set up your colors. Alright, so set up your colors, and you do that by clicking this gear. So this eye, so look where my mouse is. This eye makes it disappear, makes it reappear. See all the lines go away, now they come back. Alright, and this gear, that's when you pick your numbers. So take a snapshot of this, pause it, right? Print screen, put it in paint, whatever. These are the numbers you need to have. 10, 21, 55, 89, 200. Alright, you can probably just not use these MAs. So on this screen, when you click style, you can unclick all the MAs if you want. Alright, and just have all the EMAs clicked and have it red, yellow, blue, purple. I need to change this color. Orange. There we go. That's what I meant to click. Because red should be your 10. So yeah, set it up just like that. And then the financial decisions and entry points that you're going to be making are going to be way better. And just remember to use the weekly, daily, and 4-hour, and nothing else, unless the coin's brand new. And that's it. This will help you make great financial choices, people. And again, look at Bitcoin or Litecoin. Is it above the red 10 daily? No. Well, actually, technically it is. It's testing it right now. But is the red line below the yellow line? Yes, that's kind of bearish. So a very bullish situation is when when the 10's above the 21, the 21's above the 55, the 55's above the 89, when that's all in line like this. So see this area here? The orange is the lowest, purple second lowest, blue's in the middle, yellow second highest, red second, that's bullish. When you see lines like this, that's bullish. What's bearish is when the red crosses below, then the yellow crosses below the blue, then it all goes below the orange. So if you ever see in price in a non-bear market, if you see yellow go below the orange, that's pretty bearish, but that's historically a good time to buy. So let's go to Bitcoin. Let's see if historically the yellow going below the orange is a good time to buy. Okay, so this is really good bear market advice for like next year. Let's see. So this is the daily candle. Let's see. Is it a good time to buy when the yellow is below the orange? Yellow goes below the orange. And if you bought when it started coming back up about here, you got from 7,600 to 9,900. Okay, and what you can do is you can sell when just decide when should I sell. Well, if it's a fake out, that means price is going to pop above. It's going to drive the yellow line above the orange line and fake out and come back down in a bear market. And guess what happened? It happened over and over and over. It took people's money. So what happened is everybody's scared. Oh yes, we're going back up, guys. We're bullish, Bitcoin to the moon. Bitcoin to the moon. Boom, took your money. Okay, now it's over, guys. Yeah. Bitcoin to the moon. Okay, this time, guys, third time's the charm. Let's buy back again. Boom. That's what bear markets do, people. The bots are taking your money. They get you excited, then they take your money. So what's happening here on a micro scale on the 4-hour is same dang thing. It gets you excited because it went up to the exact support that it needs to break out, and it bounced right off of it. And it did it to the dollar. Almost to the dollar. Look. So look how this horizontal line is touching. Look at that. It's perfectly touching the wicks of this and that. Look, price went exactly to the dollar to it. These are bots taking your money. And what happened is everybody's saying, oh no. Oh yeah, and YouTubers, yeah, Bitcoin, it's bullish, it's going up, guys. So people buy back in. And what happened? Hit the exact dollar amount, almost to the penny. And it's going to come back down, people. It's going to come back down. Now, it might come back down and just consolidate around here. And Bitcoin historically loves to consolidate on the 4-hour 200. All right, and it might consolidate here for quite a while. So that's what's happening. Stay safe in crypto and rock and roll. Talk at you later.